late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today I want to kind of get back into the educational side of things. It's going to be less actually teaching you guys and more showing you how to set up your TradingView if you're looking to get into technical analysis. So I kind of want to start off by talking about my own journey a little bit. I have made a video on this, but I just want to say when I started investing, I was trying to learn everything at once. It was really overwhelming. There's a million things to learn when it comes to technical analysis. It's all different. It's kind of this rabbit hole that you can go down to your heart's extent. But that being said, we don't want to overcomplicate this. Actually, we just want to come up with a simple system that shows us that macro trends or the way the market is moving, and that's going to help us position ourselves in those trends. You know, we're not overcomplicating things, but we do need to pay attention to more factors than just the chart or just what the price is doing that day. So I've talked about all kinds of these indicators. I know we're all different levels of experience. For some people, it might be pretty confusing, some of the things I am talking about when it comes to technical analysis. Don't worry, it was just as confusing for me when I first started, and it takes time, it takes patience, you definitely have to put in the work to get the reward. But the more time that you spend on the charts, the more time that you practice these concepts, it just becomes second nature, and then you're able to open up the charts and quickly identify whether or not there might be any sort of opportunity there, or if things are looking a little bit overheated, allowing you to kind of de-risk your positions, or oversold, kind of signaling that we might enter the market. So we're just going to jump over to the chart here. I want to talk about, basically, we're going to look at a free TradingView profile. So I do have premium. The benefit for premium, it just allows you a lot more customization as well. It kind of gives you the ability to you get access to a lot more tools. You can have more indicators open on the chart at once. So for an ease of access, if you're really into technical analysis, you love charting, I really enjoy it. So I eventually did just upgrade to the premium. That being said, I waited for a Black Friday sale to upgrade to premium because TradingView, it's quite expensive for the average person for the monthly cost if you're getting the top tier. If you wait for a substantial sale, so all the time, you know, multiple times throughout the year, they'll have a 50-60% off sale. You can take advantage of that and lock in TradingView premium for about $10-15 a month. So $10-15 a month, to me, that's less than what I spend on coffee, and it gives me the advantage of being able to have more open on my charts, be able to move through things a lot quicker, save that time. But that being said, don't let it discourage you from learning technical analysis just because you don't have the premium account. You don't need it, and that's what I'm going to show you here. So I used free TradingView for the majority of the time I spent learning technical analysis until I was confident in the system I had developed. And then when I wanted that ease of access, kind of the more customization, that's when I really looked to take advantage of the premium option. But essentially what we want to do when we look at the charts, we want to look at the trend. We want to look and tell if the asset is overbought or oversold. So is it gone on a big run? Is it overheated? Maybe it's due for a little pullback, or maybe it's gone on a big drop. It's come to very oversold levels, and we might see buyers stepping in. So I'm going to show you different indicators, different things on TradingView to help you gauge that. I'm going to show you my basic setup. So you're welcome to use as many indicators as you want. I use all kinds of them, but I kind of use these as my core indicators to give me both the trend momentum as well as the strength or kind of the overbought or oversold nature of the asset. So the first thing we're going to do when we come to our chart here, we're just going to open up this super chart. What you want to do is get your indicators in order here. So we're going to go to our indicator tab right up here, and you see I've already favorited the ones that I want to focus on today. So we have the direction, you'll probably remember some of these that I've talked about, the directional movement index, the MACD, so that's the moving average convergence divergence. We have the moving average ribbon. So this is just a moving average tool that allows us to have 4 different moving averages open at once. We have a moving average simple, and then we've got our relative strength index. This is to gauge overbought or oversold nature. We've got volume. This tells us whether, or kind of gives us those cues when we go to those levels of support or resistance and we see strong rejections and upticks in volume, or we see strong bounces with upticks in volume. So you start to see that volume volume increasing, that's another telltale sign that buyers are stepping in at that level to try and hold the line. So that's another thing we can look at. And then lastly, we've got a vortex indicator. So similar to the directional movement index over here, it's going to help us gauge the trend and the momentum. That being said, I'll explain the difference between the two. But first off, we're just starting here with the MACD and the RSI. So we've got that open on our chart. Currently, we're on the daily chart here. So for most people, if you're an average investor, you're probably looking at longer term positions, you know, maybe for months, years. So you're going to be looking at these higher time frame charts. So when I talk about time frame, you can come in here and just look at all the different instances. So if you choose a different time frame, that's each one of these candles represents that. So if we flip to the 5-minute here, that's going to be really low time frame. Essentially, you can see all these candles just representing 5 minutes of price action. This isn't what you want to look at if you're trying to figure out what's happening in the macro side of things. So you want to focus on the high time frame. I like these time frames here: 1 hour, 4 hours, 1 day, 1 week, and 1 month. Those are great ones to start out on. So let's just say we're starting out on the daily chart here. And we see we've got our RSI open, we've got our MACD open, so we can see we're pretty much we're going to look at these and gauge whether or not we're overbought or oversold. So I'll just pull these up, make them a little bit more visible. So what we can see here is basically RSI, we've got these two lines right here. If we drop below 30, we're technically more oversold or undervalued based on that momentum. And then when we get to these extensions up here above 70, that gets into more overbought territory. So that's more coincides with peaks. So we see all these the peaks just materializing right after we get to that overbought nature here. And it's the same thing on the MACD that we see. So we just see these extensions here. So this blue line we want to see on top of the orange line, and we want a green histogram. That signals to me that's bullish momentum to the upside. And then we see when we cross below that orange line, that's when I talk about the bearish cross of the MACD. So same thing, those crosses and the histogram flipping to red is a bearish signal. That means that the buying pressure is kind of ran out. Sellers are starting to step in and we might be due for a bit of a correction, and we saw that here. The price came down. Same thing over here, price continued to come down, and same thing here. Even though we got little bounces, price just continued trending down here until we got our big push up. So we got this major extension, and that's when we went to new highs, but we recognized that loss of bullish momentum, overbought nature, both on the MACD and the RSI. We got our bearish crosses, so those are all warning signals that there was a little bit too much froth in the market. Maybe we were due for that retracement, and we were able to actually de-risk ourselves quite nicely up here and save ourselves from the majority of the downside. So that's two things we can look at to gauge the overbought or oversold nature of the assets, and it's going to change from time frame to time frame. So if we take a look over here on the weekly, we can see a slightly different picture, a little bit less noise. We do see we're just below neutral territory here. Just still that red histogram hasn't slowed down yet, which is what we want to see for that relief to the upside. So to me, on the weekly and the daily, we're kind of just chopping for now. We're in this sideways price action, trying to figure out what's going on in the markets. So the RSI, the MACD, two very useful tools to help you gauge the overbought or oversold nature of the market. So with the TradingView free account, you're only allowed to have a certain amount of indicators open on the chart at once. So usually you can get 3 indicators. I usually have 2 open, and then I always have the volume open down here just to keep that consistent. So if we'll just get rid of these, so you come here, delete these, we're going to go to our indicator dashboard again, and what I'm going to pull up now is our trend strength indicator. So we've got the directional movement index, and we've got our vortex indicator. So the way we're going to look at these, the vortex indicator is a better gauge of just bottoms and tops. For instance, the directional movement index has this additional line here. So this red line is the ADX line. That's going to show us how strong of a trend that is. When you see the ADX breaking above 25, that's that signal that the trend is pretty strong there and we could continue up. You want to see the blue DMI positive line above the red red ADX line, which is also ideally above the orange DMI negative line. This is your strongest trend setup, and this tells you, so you can kind of see right here, like look where that bounced right from this breakout retest low. So this tells you, the vortex indicator just gives you a broad view that the trend, the momentum is to the upside. We've got the blue positive line above the red line, but we don't have that additional signal here giving us that trend strength. So what we saw over here, we actually saw that the ADX line got above these two lines here, but that trend was not able to really maintain too much strength for too long, ultimately bleeding back down here. And then on the vortex right now, we are trying to get a little bit of a bounce. We'll see if we can get that DMI positive line to curl back up. Again, I want to see that get above the red ADX line and the DMI minus line here. So these are two indicators that we can use to gauge the momentum of the trend. So we get to overbought, oversold nature. We bounce from key levels of support. We start printing our reversal structure, so we start putting in higher highs and higher lows on the daily or weekly chart. We get enough confirmation there, and then we see RSI and MACD are reset to oversold levels, and we see the DMI positive line gaining momentum here. We see the ADX line supporting it, and we start to see these two lines converging with each other. Ideally, we want those bullish crosses. Same thing that we see over here. We either want this bounce here, or we just want to get a bullish cross. Same thing over here, back above this red line, signaling the low right there. So you can tell pretty much this is, it's a little bit less signals there. So it'll tell you kind of when it's good for picking kind of the broad trend, but gauging the actual momentum of the trend is another useful thing to keep in mind. So I kind of prefer the directional movement index for that reason. That being said, it is a little bit more confusing. There's more signals to take it to kind of keep in mind. So if you're just having if you're struggling kind of grasping the directional movement index, just start with the vortex indicator. That's another great indicator that can gauge that trend momentum or whatever the trend is going. So those are two options we have there. We have the DMI and we've got the vortex indicator. So that's what you're going to use to gauge the kind of the trend and the momentum of the trend. We're going to look here, we're going to delete these, and we're going to pull up a couple more here. So now we're going to talk about moving averages. I talk about these all the time. You guys know I've been talking about the 50 and the 200-day moving average quite extensively recently. We're going to come up here. So right here you see the moving average ribbon. We're going to come to our settings, clicking settings here. So you see we have 4 different options for moving averages here. What I have for my preferable moving averages, I have the 8-day estimated or exponential moving average. I've got the 21-day exponential moving average. I've got the 50-day simple moving average, so the SMA, and the 200-day simple moving average also as an SMA. So for my high time frame moving averages, like the 50-day and the 200-day, I use the simple moving average just to get rid of more of the noise because it's more of a high time frame signal. The 8-day and the 21-day are shorter time frames. They're going to be able to capture a bit more of kind of the price action going on intraday. So these ones I have as exponential moving averages, and then these ones I have as simple moving averages. And then we just come here, you come down here, you're going to save this setup as the default. So every time you open your moving average ribbon, you'll have these all automatically set up, good to go. And if you ever want to just get rid of some of the noise, come into the settings. This is what I do sometimes. If I'm just looking at the high time frame trend, I'll just click these and get rid of them. I'm not interested in them for the low time or for the high time frame trend really. So we see here, we've got our 50-day, our 200-day. We've also got this one here. So we have a simple moving average, basically just allows you to have one moving average. So with these two indicators, you can have you can have 5 moving averages open on the chart at once with a free account. We're going to come down here, the time frame that we're looking at here, I'm going to set that to 1 week. So this is our 200-week moving average. We're going to come here, we're going to change the color. Let's make it green because green is support, and you can also make it a little bit more, a little thicker here if we want to show it as a greater line of support in the sand. So we see, same thing we're going to do, save as default. Okay, now we've got our moving averages set up here. You can see this is our 50-day, 200-day. We did get that bearish cross. That's what I was warning about. That's why we de-risked, because we saw this curling over. and we saw all the warning signals, but that's for the macro trends. I'll show you again why I look at the 50 and 200-day moving average, because it's a really good gauge of the overall trend of markets. So we can kind of see here when the 50-day broke above that 200-day with price above it, that's essentially where we had all our major extensions in the market. So in through 2017, in through 2020, and then same thing here. Once we got above, held it there, we're holding that as support, and you can see after the bearish crosses, when price gets stuck underneath, that's that downtrend. So that's why these two moving averages are very important. So definitely don't sleep on those moving averages. The 50 and the 200-day, very useful. The 200 week is another useful tool here to just gauge. You can see on this cycle, it actually acted as support. We did go below it in kind of this bear market here, so we don't have to hold at the 200-day or the 200-week moving average, but it is a strong level of support that we are watching. But we are specifically looking at that 50 and 200-day, making sure that we want that uptrend structure. So we want the orange to break above the blue, and we want price to hold both those moving averages as support if we want to continue to the upside. So then we can come in here. Let's actually take a look. We're going to bring back our low time frame moving averages, and we're going to zoom in to the lower time frame. So we'll take a look at the 4-hour chart here. You can see this is just giving us an idea. Look at all this resistance here. So not only do we have the bearish cross of these two moving averages, we've got all 4 of our moving averages turned down. So this is major resistance. You can also see, we won't get into the price action here, but we also have a bit of a trend line kind of there. Pretty much just resistance and then resistance by our moving averages. So this downtrending price action underneath key moving averages just tells me there's more work to do for Bitcoin to kind of try to put in a more convincing bottom. We did see a nice big buying candle right in through here, so we'll see if we can get some follow through, but we're going to continue just watching the trend. We want to regain these low time frame moving averages first. That's the first step, and then we can start to really try to attack these higher time frame moving averages. But it's pretty much, I just wanted to show you guys, you can get a lot of information from the free version of TradingView. You just have to know which indicators to look at and which ones to focus on. So again, for me, you want to focus on the overbought, oversold nature of the market. That's going to be your RSI and your MACD. You want to focus on the trend and the trend strength. So your moving averages can help you show trends, as well as the directional movement index and the vortex indicator can also signal that trend. The directional movement index is used to gauge the trend momentum or the trend strength. So you can use this in addition to your moving averages to gauge how strong that trend is. Maybe it's not very strong, maybe it's really strong, and then position yourself accordingly. And then we just look at all the other little factors that we talked about, individual factors. So there's a million different indicators. I'll link a video. I did talk about tons of indicators that I use in my TradingView. You'll see me using all sorts of ones, but these are the core ones that I focus on. I think they can tell every investor a lot about what's going on in the market, and I think it pays to learn these. If you're interested in investing, if you want to be financially free and self-directed, you definitely want to learn as much as you can. The more information that you can learn, the more knowledge, the more signals that we can stack in our favor, the more likely you are to be successful in the long term. So we're going to just wrap it up there. So again, to summarize, watch the trend and the strength, DMI, vortex indicator, moving averages, and watch the overbought, oversold nature of the asset, relative strength, moving average, convergence, divergence. Make sure you're watching volume to see any major buyers or sellers stepping in, and then just go from there. Start experimenting with different indicators. You can try out some of the other ones I use, but really focus on these ones as a core concept to learn. Get it down, figure them out, and then go from there, and just keep expanding on your knowledge. You never stop learning. There's always more we can do. So as a retail investor, a big thing for me was managing my emotion. Essentially, emotion is what has made me make the worst decisions throughout my investment journey, and I wanted to learn from those. I wanted to mitigate the chance of making those same mistakes. So when I first got into investing, I had no interest in technical analysis. I thought it was too much to learn. It's all a bunch of mumbo jumbo. You know, who really cares? A lot of people call it astrology. So I kind of argue against that. I think the charts are a representation of the market. Every candlestick here kind of tells a slightly different story, and they all tell a little bit different part of a story. When you put it all together, you can really get an idea of which way the market is trending, where are there a lot of buyers and sellers likely to step in, and then when is the asset considered overvalued or undervalued. And then by taking all of that, putting it together and throwing in some more of our concepts like price action patterns, candlestick patterns, support and resistance, we can take all these factors, put them together, find those key probable levels to enter the market and ride those trends to the upside, compounding gains and thus achieving that goal of financial freedom in the kind of the grand scheme of things. So don't stop learning, guys. Don't be discouraged. I know it's hard. It's a lot to learn at once. If you are interested in this kind of stuff, I really recommend just spending a little bit of time every day. Don't go all in right away. Like, don't spend 12 hours a day looking at charts, but maybe just devote 20 minutes, 30 minutes, whatever you can spare, even if you only have 10 minutes a day, to just go and look at charts, look at these indicators, watch how price reacts at these different levels, and then get an idea of how the market really works. And we can put all these tools together, give us a good idea of what's going on, and then position ourselves accordingly. So thank you so much for watching, guys. If you like the content, please share, subscribe, like. It all means the world to me, and I'll see you in the next one.